Guys, Gail Sylvester here. Let's talk about your credit score. What do you know about credit scores? It's like that in word that everyone talks about. Based on credit score, you can do this, and based on credit score, you can't do this. And how do we get a good credit score, or how do we get a bad credit score? So it's kind of like it is a mystery. It's all about the algorithm as well, and it's about who is doing the credit inquiry as well. So there's different financial sectors based on who's doing the credit inquiry. I think it's going to be how you're going to get the actual credit score. Now that can range anywhere from like 300 up to 900. Now 900 is like you're walking on water. It's like, oh my gosh, you've got like the perfect credit score. I could probably count on one hand how many times I get a 900 in a year. They're pretty rare. They're like a unicorn, but we get pretty excited when we see them. I've never seen a 300, so that's good news too. We do see some in the 400s and in the fives, and then of course the 600, 700, and 800s, right? So if you're above 600, that's a good space to be, because we can generally get a lot done in that space. When you're under 600, that's where we can run into some hiccups, but that's what we've got alternate lending for, so don't worry about that. But in terms of you, the consumer, how do you get good credit, and how do you get a good credit score? And it really is all about the length of time that you've had an account open, the payment history, making sure that you never miss a payment. I don't care if the minimum payment is $10 that month, make it, because it's all about the obligation and the activity, and that's what keeps your credit score good. But it's also about the amount that's borrowed on revolving credit compared to the limit. So for instance, if you have a limit of $1,000 and you carry your balance in and around the 500 mark, that's actually going to increase your credit score. Reason being is that you're revolving the credit accordingly. So you're paying it and you're using it and you're paying it and you're using it, and you've got a lot of room to still use, but you're not maxed out. Now, if you are on the higher end, and let's say you're maxed out on that limit, it's actually going to bring your credit score down. Reason being is you're now maxed. You're not utilizing and revolving the revolving credit like you're supposed to. So what happens is if you've got a few credit cards that they're all near the limit, that's actually what's going to bring your credit score down. And then, but if you've got a few credit cards and then you're carrying balance on a few of them, that's okay. It's as long as we're kind of like at the 50% mark, give or take. So that's a good thing to know. But for kids and for students who have OSAP, kind of that actually has no impact on your credit score. Now that's something I learned in the last couple of years. And the reason being is that you don't have to apply based on credit. So based on credit score and income. So if the only debt and the only credit that you have is a student loan, it actually isn't incorporating a credit score for you. So what you actually will want to do to get that is to get a student credit card, like a student visa. So majority of them, again, will start at like the 500 or $1,000 limit, and they're the ones that you want to use, but hopefully not carry a balance. But if you do, don't max it out. Keep it at like the halfway mark. And that's actually what's going to build the momentum and build the credit score for you. So for the students, so as you're kind of coming out of post-secondary, you've gotten to the habit of making credit card payments regularly. So you've created good habits, which is going to help you when you have to take out, say a car loan, I think, or we're now paying back that student loan that you borrowed from OSAP. So it's all about the habits and the momentum, and it's keeping it consistent and keeping it good. And that's what's going to keep your credit score good. And the higher the credit score, the easier it's going to be to actually get some borrowing. So for that car loan that you're looking for. But if you mess up and you just bury your head in the sand and you don't make that credit card payment, it will come back to bite you. Not going to lie. So that's actually going to be the detriment. So the mistakes and the errors that we're going to make at like 19, 20, 21 in terms of credit cards, when you're more mature, you're out working and you've got the career and you're looking to get some borrowing, like for a car or a house, or even a rent, like, because you have to fill out an application for that too. That's the time where it's going to come back and kind of bite you. So I can't stress enough in terms of when you're just starting is keeping the minimum payments going. And that's what's going to build up the good credit history, because it's all about the length of time that you had accounts. So that is what helps. It's also in terms of the amount that you borrow and the amount that you owe compared to the limits. And it's all about just keeping that good payment history. That's how we're going to start seeing the credit scores increasing. So then when the time comes, maybe when you go to get your car loan, you don't need to ask mom and dad to be a cosigner because you can do it on your own. So if you have any questions in regards to credit scores, how are they going to impact you today, tomorrow, and a few years down the road? That's what we're here for. Reach out. It's more than just mortgages. It's about getting the foundation and getting started on your way into the financial world. So we're just a phone call or an email away, and I look forward to chatting with you soon. Take care.